The information provided in this program is of a general nature and is not intended to be personalised financial advice. We encourage you to seek appropriate advice from a qualified professional to suit your individual circumstances. After bank failures and bailouts last week, two of Switzerland's largest banks are now in deal discussions. And the head of the New Zealand Stock Exchange reveals how he feels about its lack of listings and the type of companies he'd like to see offered to investors. It's Monday the 20th of March and you're watching Markets with Madison. One of Switzerland's largest banks is being bought out by another. Rival UBS has reportedly agreed to buy Credit Suisse for half a Swiss franc a share, a deal totaling $2 billion. It's twice as much as UBS's original bid, but still far less than Credit Suisse's closing price of 1.86 Swiss francs last week. It comes after Credit Suisse stock suffered its worst week since the beginning of the pandemic last week, after its shareholder, Saudi National Bank, said it couldn't provide any more funding to help prop it up. Shares did rebound after a bailout from the Swiss Central Bank for 50 billion Swiss francs, but it's failed to fire confidence beyond that. After bank failures in the US, including Silicon Valley Bank, worth $209 billion of assets, BlackRock's chief executive Larry Fink is questioning if more failures could come. In his annual letter to investors, Fink asked if the dominoes were starting to fall, following years of aggressive fiscal and monetary policy and asset liability mismatches at regional American banks. He said it seemed, quote, inevitable that some banks will now need to pull back on lending to shore up their balance sheets. Well, my mates know I'll take any excuse to celebrate. And this month, the NZX Top 50 Index had its 20th birthday. The index has increased in value by 300% since 2003, to be worth $120 billion now. Its chief executive, Mark Peterson, has led the exchange for the past 7 years. In this extended interview, we discuss everything from delistings to private equity power, IPOs, including my food bag, and why the NZX is dabbling in funds management. First off, he told me what he thinks the NZX is missing.
I think it's broadly there. I mean, it doesn't pick up all sectors, as you might like. We'd love some banks listed, as you could imagine. There are other parts of the economy, the agricultural sector. We'd like more of that represented on the exchange. Even manufacturing, that could, more of that would be good too. But I think it's broadly there. But at the end of the day, what you're looking for is a bigger portion of the New Zealand economy listed. Most mature markets around the world have approximately north of 100% of the GDP is actually listed on their markets. We're probably sitting in around the 60s. Some of that comes from the history, if you like, of New Zealand, so agricultural sector, cooperatives, that sort of thing. Other things in other markets have come from previously government-owned or local government-owned assets, which have obviously been sold oftentimes in other countries. And maybe there's an opportunity for some of that to occur as we go forward as well.
Can you give me some names of companies in those sectors that you'd love to list if they were listening?
You look across the market. I won't give you names, but you look across the market. There's some fantastic businesses out there. A number of family-owned businesses which have done incredibly well. That you sort of think more investors would love to invest into them. There's infrastructure providers out there that is owned by local government and central government. I'm sure investors would love to get hold of those. And if some of the banking sector decided that it would be good to have a listing in New Zealand, I'm sure that would be welcomed as well. So, there's a range of firms. We just obviously got to work hard, and the industry's got to come together and wrap around it and see if we can make it happen.
Now, staying with the state of the market of the NZX, how would you score the NZX right now from 1 being poor, 10 to being fantastic in terms of liquidity, issuer diversity, and also issuer resilience and strength?
I think we're actually quite a resilient market. When you think about our position in the rest of the world, once upon a time, go back, pre the mixed ownership model issuance, our market was probably seen as a risk-on market. So international investors would come here when they decide to take more of a punt. That's different now. When you've got great businesses, well-governed, paying good dividends, that's actually some of the, bread and butter that international investors are actually looking for. And in that sense, we're actually seen as a very, very solid market. But when I think about, that 1 to 10 scale, we're well through that range, I would have thought.
On all measures, on liquidity too, you think?
I think in parts of the market, absolutely. Certainly the smaller cap stocks and things, everybody'd love to see a bit more liquidity there. But at the end of the day, if you want to invest in it, you can.
Now, I want to ask you about listings, and there's been a number of companies that have delisted throughout your 7-year tenure. To mention a few of them, Z Energy, Trade Me, Harmony, Tilt Renewables, DGL came and then left, Orion Health and Xero, and just mentioning that those were all corporate decisions there too. There have been some listings also in your time, Vulcan Steel, Winton Land, some cannabis companies, Rua and Cannasouth, Napier Port partially, My Food Bag as well. But all of last year and also in 2018, there were no initial public offerings at all. And in 2019, Brian Gaynor, may he rest in peace, wrote on the Herald, quote, "Why can't the NZX hold on to its existing companies and attract new listings?" Why 4 years following that, Mark? Is that same question still relevant?
I look at it slightly differently at the end of the day. You're going to get corporate cycles at the end of the day. So some people are going to like the look of assets and they're going to pitch up for them, such as Trade Me. We can't control that. That's just part of the ebb and flow. You're going to get some areas there where, firms will look offshore, if you like, for their listings. And, it's unfortunate that Xero did what they did. We didn't think they needed to, but they did. But you might also note that in the last 3 years, so since 2019, there hasn't been one firm that's taken a sole listing in Australia. So I think a lot of that comes down to the efforts of the team in terms of making sure that they're out there talking to the prospects, talking to our existing customers, and making sure they understand the value of the local market. At the same time too, we've opened up the door for foreign exempt listings into New Zealand. So Ampol, which is one of the oldest listed firms in Australia, took a listing in New Zealand when they bought Z Energy. It does ebb and flow a bit. The direct listing route that we've now got, so you don't have to raise capital at the time that so we've had a number of businesses that have actually used that route. So IPOs themselves, we all love IPOs, the market loves an IPO, but in actual fact, to be able to invest in some stocks, it's not just the IPO channel that we need to be focused on, it's actually all channels. At the same time too, I think everybody, needs to realise that bond issuance, if you like, is a really big thing too. To diversify your funding base, to use the public debt markets. We've had a number of companies that have now come as an issuer there who are new over the last few years. So, it's sort of, I don't get too negative about that. I look at the total amount of capital raised. Is the market healthy?
I guess though something like bond issuance compared to an IPO, it's not as sexy, is it? You don't necessarily ring the bell. It doesn't have all of the fanfare that comes with it. So does that then make the NZX a bit of a harder sell to new investors?
No, not at all. Firstly, with the new office in Auckland, we'll ring the bell on every new issuance.
Can we do it after this?
We could do it after this if you'd like. Whether it's a debt listing, whether it's an anniversary, whether it's green bond, or a traditional listing or an IPO. We will make sure we actually celebrate company success, and it's really important the NZX does that, for local firms and shines a light on some of those success stories.
Do you think that the quality of companies listing, even if it is through a reverse listing, possibly like Me Today, do you think the quality of those that are coming to market match the quality of those leaving?
Oh, I think, you never judge quality. Because at the end of the day,
Isn't that what it's all about? Quality being offered to investors?
Yeah, but who are we to actually say, whether a company's either going to be successful or not going to be successful? There are some great small firms who have got some great ideas, who need access to capital to grow those ideas, and they could turn into some fantastic businesses, and we've seen that before. So we look at it and go, what's the story? What's the objective of these firms to do? Whether they're small today, they might not be small tomorrow. And that's what markets are all about. It's actually about capital formation, investors understanding what they're doing, those companies doing the things they promise, going, forward and growing, and magic can happen. So, I think it's hard to sort of assess quality in the way that that's described. I think we've got to give these businesses a shot.
My Food Bag. I want to ask you about that. What do you make of that listing, specifically the way that it was packaged and sold to investors?
Well, at the end of the day, we're the market. We're not necessarily, part of that whole mechanical process prior to it. We think My Food Bag is a great addition to the market. They're in an area which is different. At the end of the day, we just hope that My Food Bag succeeds, ultimately. It's just one of those things that sometimes happens. It might take some time.
But did it highlight to you and to the NZX more broadly any changes that you think are required with the way IPOs are structured?
No, I think what it does do, it's probably taught the market a few things in terms of how you sort of bring these firms through. And maybe we might not see that approach taken again in the exact same way. But in terms of the platform that we lay out and the rules that we lay out, it's all there for people to use.
Now, there have been a number of companies that have suggested and talked publicly and openly about listing, and then it's sadly never come to fruition. Vodafone being one, 2 Degrees, another telco, Partners Life, the big insurance company. Private equity won you out at the end of the day. How can the NZX compete with private equity? Is it even possible?
We would have loved to have seen those firms come through. That would have been fantastic. Private equity still, when you think about those, whether it's Infratil in that instance or whether it's other private equity firms, ultimately time will sort of evolve and they will do something with those businesses. And at the end of the day, public markets are still there. We'd like to get them down the track. How do we compete? In one sense, private equity can be a supplier, if you like, of product through to us. So in that sense, we work very closely with the private equity firms. It might be the perfect time for some of these companies to actually receive private capital too, grow, mature a little further, and then come to the public markets later. So, we don't mind, at the end of the day.
Shareholders of Pushpay just rejected a private equity takeover bid which was worth $1.5 billion. They said no thanks to $1.34 a share. Do you view that as a win?
Oh, I mean, that is the market at work, at the end of the day.
Did you celebrate?
We love Pushpay being part of the market, and we celebrate them and their activities all the time. But the point is that the market's taken a view, or investors have taken a view as to what they think it's worth, what they think the opportunities are. Time will tell. I
also just want to speak to you about NZX as its own business, of course, too. Your SmartShares subsidiary now officially, I saw, has $10 billion in funds under management. You just acquired another wealth management business for around $50 million, I believe. There's plenty of fund management firms out there. Why does the NZX feel the need to compete with them?
When you look at how you grow markets, and we've got a capital markets business, we've got the funds management business, and we've got a wealth tech platform. We look at ourselves as an infrastructure provider in many ways. We provide the core market on one hand. When we look out to other exchanges around the world, most have an element of diversification to them. Others have gone down the technology road or the private market road, or the data road. We just happen to have gone down some roads which are closer to financial markets. They're in financial services or financial services infrastructure.
How does it help the firms that you're competing with if you're going in there and eating their lunch and taking money and customers off them?
Yeah, well, we're not really, because they provide a different service. They provide an active product. They price it different.
You just acquired an active manager, so now you are too.
Well, yeah, we'll see how we go over time. I mean, there are some discussions to have about, just how we evolve those products and what the market wants. But at the end of the day, it's another string to the bow. The key point there is we don't see ourselves competing directly with those other managers.
Ultimately, and I hope you answer this one honestly, are you growing that side of the NZX to eventually grow it and carve it off and make some money from it? Or do you genuinely long-term want the NZX to be involved in funds management?
No, I think when you look at, NZX has been around for over 150 years. We've got to make sure that it's around for the next 150 years. You want the business to be strong. And time will tell as to how we think about it, but right here, right now, they are core to our strategy.
Thank you so much for your time, Mark. It's been lovely to chat to you. I think we should go and ring that bell, should we?
Yeah, we could do that. Perfect. Thanks.
You think I can top that? I'm sure. Okay,
we'll give it a go.
Let me know what you're watching this week and what you thought of that NZX interview. As an investor, do you think the New Zealand Stock Exchange is on the right track? You can also stay up to date with any more bank bailout coverage this week on nzherald.co.nz. Now go put your money to work.